Question 1. The efficiency study reveals that a proposed streamlining of the internal approval process for new product development could significantly reduce turnaround times. However, a preliminary review suggests this streamlined process might bypass some of the established risk assessment checkpoints designed to identify potential safety or compliance issues early on. Which of the following represents the most prudent and professionally responsible course of action regarding the efficiency study's findings? Option A. Recommend the streamlined process, but include a clear caveat in the report detailing the bypassed risk checkpoints and proposing a post-implementation review of potential risks. Option B. Recommend the streamlined process only if it can be demonstrated that the bypassed risk checkpoints are redundant and do not contribute meaningfully to overall risk mitigation. Option C. Implement the streamlined process immediately to realize efficiency gains, with the understanding that any emerging risks will be addressed reactively as they arise. Option D. Proceed with implementing the streamlined process without any mention of the bypassed risk checkpoints, assuming that the benefits of efficiency outweigh any potential unquantified risks. The correct answer is A. Recommend the streamlined process, but include a clear caveat in the report detailing the bypassed risk checkpoints and proposing a post-implementation review of potential risks. Explanation. Scenario analysis. This scenario presents a professional challenge because it requires balancing the need for operational efficiency with the imperative to maintain robust risk assessment practices. The pressure to reduce costs and streamline processes can inadvertently lead to the erosion of critical risk management functions, potentially exposing the company to significant financial, reputational, and regulatory risks. Careful judgment is required to ensure that efficiency gains do not compromise the thoroughness and effectiveness of risk identification, evaluation, and mitigation. Correct approach analysis. The correct approach involves integrating risk assessment considerations directly into the efficiency study's recommendations. This means that any proposed changes aimed at improving efficiency must be evaluated for their potential impact on the company's risk profile. If a proposed efficiency measure increases risk, the recommendation should either be modified to mitigate that risk, or the potential increase in risk should be explicitly acknowledged and accepted by senior management, along with a clear rationale. This aligns with the principles of prudent risk management, which mandates that all business activities, including those focused on efficiency, should be conducted with an awareness of and a plan to manage associated risks. Regulatory frameworks, such as those governing financial services or operational integrity, often require a proactive and integrated approach to risk management, ensuring that risk considerations are embedded in strategic decision-making. Incorrect approaches analysis. One incorrect approach would be to implement efficiency recommendations without any consideration for their impact on risk. This is a direct violation of fundamental risk management principles and regulatory expectations. It demonstrates a failure to identify and assess potential threats, leaving the company vulnerable to unforeseen events. Ethically, it represents a dereliction of duty to protect the company's assets and stakeholders. Another incorrect approach is to dismiss potential risks identified during the efficiency study as minor or unlikely without proper substantiation. This constitutes a failure in due diligence and a disregard for the precautionary principle. Regulatory bodies often penalize firms for failing to adequately assess and manage foreseeable risks, even if those risks do not materialize. A third incorrect approach is to propose efficiency measures that significantly increase risk without outlining corresponding mitigation strategies or seeking appropriate management approval for the elevated risk appetite. This demonstrates a lack of comprehensive risk thinking and can lead to significant operational failures or compliance breaches. Professional reasoning. Professionals should adopt a decision-making framework that prioritizes a holistic view of business operations. This involves 1. Clearly defining the objectives of any initiative, including efficiency improvements. 2. Systematically identifying all potential risks associated with proposed changes. 3. Evaluating the likelihood and impact of these risks. 4. Developing appropriate mitigation strategies or contingency plans. 5. Communicating risk implications clearly to decision makers. 6. Ensuring that risk management is an ongoing process, not a one-time event. This systematic approach ensures that efficiency is pursued responsibly, safeguarding the organization's long-term stability and compliance. Question 2. Operational review demonstrates that a sales representative is under significant pressure to meet quarterly targets. During a client meeting, the representative identifies that a particular investment product, while profitable for the firm, is not entirely suitable for the client's stated risk appetite and financial goals, but the representative believes they can subtly guide the client towards it by highlighting only its potential upside. The representative is aware that a more suitable but less profitable for the firm alternative exists. What is the most appropriate course of action for the sales representative? Option A. Subtly omit certain details about the investment product's risks and limitations to encourage the client to accept it, thereby meeting the sales target. Option B. Proceed with the sale of the investment product, focusing on its potential benefits and downplaying any associated risks to meet the sales target. Option C. Decline to proceed with the sale of the unsuitable product and escalate concerns about the pressure to meet targets and the potential for mis-selling to their compliance department. Option D. Ignore the client's specific needs and proceed with the sale of the most profitable product for the firm, as meeting targets is the primary objective. The correct answer is C. Decline to proceed with the sale of the unsuitable product and escalate concerns about the pressure to meet targets and the potential for mis-selling to their compliance department. Explanation. This scenario presents a professional challenge due to the conflict between immediate financial gain and long-term ethical and regulatory compliance. The pressure to meet sales targets can incentivize shortcuts or misrepresentation, which directly contravene the principles of honest dealing and customer best interest expected in financial services. Careful judgment is required to navigate this pressure while upholding professional integrity. The correct approach represents best professional practice because it prioritizes adherence to regulatory requirements and ethical conduct over short-term performance metrics. Specifically, it aligns with the principles of treating customers fairly and acting with integrity, fundamental tenets of the Financial Conduct Authority, FCA Handbook, particularly SISC, Systems and Controls, and COBS, Conduct of Business Sourcebooks. By escalating the concern through appropriate channels, the individual ensures that potential misconduct is addressed systematically and that the firm can take corrective action, thereby protecting both customers and the firm's reputation. This proactive and principled stance demonstrates a commitment to regulatory compliance and ethical responsibility. An incorrect approach that involves proceeding with the sale despite reservations fails to uphold the duty of care owed to the customer and breaches the FCA's principles for businesses, specifically Principle 6, Customers' Interests, and Principle 7, Communications with Clients. Misrepresenting the product's suitability or downplaying its risks is a direct violation of the requirement to provide clear, fair, and not misleading information. Another incorrect approach, which is to ignore the issue and focus solely on meeting the sales target, represents a severe ethical and regulatory failure. This demonstrates a lack of integrity and a disregard for customer welfare and regulatory obligations. It can lead to significant regulatory sanctions, reputational damage, and potential harm to customers. A further incorrect approach, such as subtly influencing the client to accept the product without explicit misrepresentation, but by omitting crucial details, also falls short. While not outright falsehood, this omission constitutes misleading communication and fails to ensure the product is suitable for the client's needs, violating the spirit and letter of regulatory guidance on transparency and suitability. The professional decision-making process for similar situations should involve a clear understanding of the firm's internal policies, the relevant regulatory framework, in this case, the FCA Handbook, and ethical principles. When faced with a conflict between performance targets and ethical/regulatory obligations, the professional should 1. Identify the potential ethical or regulatory breach. 2. Consult relevant policies and regulations. 3. Document concerns clearly and factually. 4. Escalate the issue through the appropriate internal channels, e.g., line manager, compliance department. 5. Seek guidance and avoid taking actions that could compromise integrity or compliance. Prioritizing ethical conduct and regulatory adherence, even when it impacts short-term performance, is paramount. Question 3. The performance metrics show a consistent decline in the quality of work submitted by a specific technician over the past quarter, impacting project timelines and requiring rework by colleagues. What is the most appropriate next step for the team lead to address this situation? Option A. Discuss the technician's performance issues with other team members to gather their opinions and identify potential reasons for the decline before speaking with the technician. Option B. Schedule a private meeting with the technician to discuss the observed performance decline, review specific examples of the work in question, and collaboratively develop a documented performance improvement plan with clear objectives and support. Option C. Immediately issue a formal written warning to the technician, citing the performance metrics as evidence of misconduct and outlining potential consequences if performance does not improve within a short, specified time frame. Option D. Assign the technician to less critical tasks temporarily to reduce the immediate impact on project timelines, while observing their performance without direct intervention. The correct answer is B. Schedule a private meeting with the technician to discuss the observed performance decline, review specific examples of the work in question, and collaboratively develop a documented performance improvement plan with clear objectives and support. Explanation. This scenario presents a professional challenge because it requires balancing the immediate need to address underperformance with the long-term implications of employee morale, development, and adherence to Nissan's internal policies and relevant employment law. A hasty or punitive approach could lead to legal disputes, damage team cohesion, and hinder future productivity. Conversely, ignoring the performance issues would be detrimental to Nissan's operational efficiency and its commitment to delivering quality vehicles and services. The correct approach represents best professional practice because it prioritizes a structured, fair, and supportive process for performance management. This aligns with principles of good employee relations, which are often implicitly or explicitly supported by employment legislation and company codes of conduct. By focusing on clear communication, documented feedback, and a development plan, Nissan demonstrates a commitment to employee growth and provides a clear pathway for improvement. This approach minimizes the risk of unfair dismissal claims and fosters a culture of accountability and continuous improvement, which are crucial for maintaining a high-performing workforce. An incorrect approach that involves immediate disciplinary action without prior warning or a documented performance improvement plan would be professionally unacceptable. This could violate employment laws regarding fair dismissal and procedural fairness, leading to potential legal challenges and financial penalties for Nissan. Ethically, it demonstrates a lack of due diligence and support for the employee, potentially creating a climate of fear and distrust within the team. Another incorrect approach, such as ignoring the performance issues altogether, is also professionally unacceptable. This neglects Nissan's responsibility to manage its workforce effectively and uphold performance standards. It can lead to a decline in overall team productivity, impact customer satisfaction, and create an unfair burden on other team members. Ethically, it fails to provide the underperforming employee with the necessary guidance and opportunity to improve, which is a fundamental aspect of responsible management. A third incorrect approach, such as making assumptions about the reasons for underperformance without direct communication, is professionally unsound. This bypasses essential steps in performance management, such as understanding the employee's perspective and identifying potential underlying causes, e.g., lack of training, personal issues, unclear expectations. This can lead to misdiagnosis of the problem and the implementation of ineffective solutions, while also damaging the employee's trust and engagement. The professional reasoning process for similar situations should involve 1. Objective assessment of performance against established metrics and expectations. 2. Direct and constructive communication with the employee to discuss observations and gather their perspective. 3. Collaborative development of a clear, actionable performance improvement plan with defined goals, timelines, and support mechanisms. 4. Regular follow-up and feedback to monitor progress and provide ongoing support. 5. Escalation to formal disciplinary procedures only if the improvement plan is not met, ensuring all steps are documented and fair. Question 4. Market research demonstrates that a new competitor has launched a product that directly challenges Nissan's market share in a key segment. A team member, without formal approval, has initiated a significant price reduction on a related Nissan product to counter the competitor's move, and this action appears to have been successful in stabilizing sales. However, this action bypassed the standard internal approval process for pricing adjustments, which involves multiple levels of review and market analysis. How should a Nissan manager best address this situation? Option A. Acknowledge the team member's proactive initiative and the positive sales outcome, then schedule a meeting to discuss the importance of the established pricing approval framework and conduct a post-action review of the decision to identify lessons learned and ensure future adherence. Option B. Accept the successful outcome as validation of the team members' decision-making and instruct the team to disregard the formal pricing approval process for similar future market challenges. Option C. Publicly reprimand the team member for circumventing established procedures, emphasizing the severe consequences of such actions for Nissan's operational integrity. Option D. Immediately praise the team member for their quick thinking and successful sales stabilization, and instruct them to continue making similar independent decisions when market threats arise. Correct answer is A. Acknowledge the team member's proactive initiative and the positive sales outcome, then schedule a meeting to discuss the importance of the established pricing approval framework and conduct a post-action review of the decision to identify lessons learned and ensure future adherence. Explanation. Scenario analysis. This scenario presents a professional challenge where a team member, while acting with good intentions, has bypassed established procedures due to perceived urgency. This creates a conflict between achieving a desired outcome and adhering to the company's risk management and decision-making framework. The challenge lies in balancing the need for agility with the imperative of controlled, documented decision-making, especially when dealing with potentially sensitive information or processes. The pressure to act quickly can obscure the importance of following established protocols, which are designed to ensure consistency, accountability, and mitigate unforeseen risks. Correct approach analysis. The correct approach involves acknowledging the team member's initiative while firmly reinforcing the importance of the established decision-making framework. This demonstrates respect for individual contributions while upholding organizational integrity. By initiating a post-action review, the professional is ensuring that the decision, even if it yielded a positive result, is analyzed within the context of the established framework. This allows for learning, potential refinement of the framework, and reinforces the expectation that all significant decisions, regardless of outcome, should be processed through the designated channels. This aligns with principles of good governance and risk management, ensuring that actions are traceable, justifiable, and aligned with company policy and any relevant regulatory guidelines that might govern Nissan's operations in its specific jurisdiction. Incorrect approaches analysis. One incorrect approach involves immediately praising the team member and overlooking the procedural lapse. This failure is regulatory and ethical because it implicitly condones bypassing established protocols. It undermines the integrity of the decision-making framework, potentially setting a precedent for future deviations. This can lead to inconsistent decision-making, increased risk of errors, and a lack of accountability, which could have implications if Nissan's operations are subject to specific industry regulations or compliance requirements. Another incorrect approach is to reprimand the team member harshly without considering the context or the positive outcome. This failure is primarily ethical and professional. While procedural adherence is important, a punitive approach can stifle initiative and create a climate of fear, discouraging employees from taking any action, even when necessary. It fails to recognize the potential for learning and improvement that can arise from analyzing deviations, rather than simply punishing them. This can also damage team morale and hinder effective collaboration. A third incorrect approach is to accept the outcome as justification for the bypass procedure and move on without any discussion. This failure is regulatory and ethical as it ignores the potential for systemic issues. It suggests that the ends justify the means, which is a dangerous principle in a regulated environment. It misses an opportunity to assess whether the framework itself is too cumbersome or if there are legitimate reasons for the deviation that should be addressed. This lack of review can lead to recurring problems and a gradual erosion of control and compliance. Professional reasoning. Professionals should utilize a structured decision-making framework that prioritizes adherence to established procedures while allowing for flexibility and learning. When deviations occur, the process should involve 1. Acknowledging the situation and the outcome. 2. Assessing the deviation against the established framework and any relevant policies or regulations. 3. Conducting a post-action review to understand the reasons for the deviation and its impact. 4. Determining if the framework needs revision or if further training is required. 5. Communicating findings and reinforcing expectations. This approach ensures accountability, promotes continuous improvement, and upholds the integrity of the organization's operational and decision-making processes. Question 5. Market research demonstrates a significant demand for a new vehicle feature that could enhance driver safety. The product development team proposes a rapid rollout to capture this market opportunity. As part of the Nissan hiring assessment test's impact assessment process, which of the following approaches best balances the urgency of market entry with the need for thorough evaluation? Option A. Proceed with the launch immediately, relying on existing safety protocols and assuming minimal negative impact due to the feature's inherent safety design. Option B. Delegate the impact assessment to the marketing team, focusing primarily on the feature's perceived benefits and competitive advantages. Option C. Initiate a comprehensive, multi-month impact assessment involving extensive simulations and external expert reviews before any market introduction. Option D. Conduct a phased impact assessment, prioritizing the most critical safety and operational risks, with a commitment to further iterative assessments post-launch based on real-world data. Correct answer is D. Conduct a phased impact assessment, prioritizing the most critical safety and operational risks, with a commitment to further iterative assessments post-launch based on real-world data. Explanation: this scenario presents a professional challenge because it requires balancing the potential benefits of a new product launch with the need to comply with the Nissan hiring assessment test's regulatory framework, specifically concerning impact assessment. The challenge lies in accurately forecasting and mitigating potential negative consequences without stifling innovation or incurring unnecessary costs. Careful judgment is required to ensure that the assessment is thorough, objective, and aligned with the test's guidelines. The correct approach represents best professional practice because it prioritizes a comprehensive and systematic evaluation of the potential impacts of the new product on various stakeholders and operational areas. This aligns with the principles of responsible product development and risk management, ensuring that the Nissan hiring assessment test's objectives are met without introducing unforeseen liabilities or operational disruptions. It demonstrates a commitment to due diligence and proactive problem solving, which are core ethical and professional responsibilities within the context of the assessment. An incorrect approach that focuses solely on immediate cost savings without a thorough impact assessment fails to meet the due diligence requirements. This could lead to significant unforeseen expenses or operational failures down the line, violating the spirit of responsible assessment. Another incorrect approach that relies on anecdotal evidence or assumptions rather than structured data collection and analysis is ethically questionable, as it introduces bias and a lack of objectivity. This undermines the integrity of the assessment process. An approach that delays the impact assessment until after the product launch is a clear regulatory failure, as it bypasses a critical pre-launch evaluation step and exposes the organization to potential noncompliance and significant risks. Professionals should adopt a decision-making framework that begins with clearly defining the scope and objectives of the impact assessment. This involves identifying all relevant stakeholders, potential impact areas, e.g., operational, financial, reputational, legal, and the methodologies to be employed. Data collection should be systematic and objective, followed by rigorous analysis to identify potential risks and opportunities. Mitigation strategies should be developed and evaluated for their effectiveness and feasibility. Finally, the assessment findings should be clearly communicated to relevant decision-makers, enabling informed choices that align with the Nissan hiring assessment test's requirements and broader organizational goals. Question 6. Assessment of how a financial advisor should proceed when a long-standing client, whose usual investment patterns are conservative, suddenly requests a series of complex, high-risk international transfers to an unfamiliar offshore entity, providing a vague and unconvincing explanation for the transactions. Option A. Advise the client that the requested transactions are outside the firm's risk appetite and decline to process them without further inquiry, thereby avoiding any potential regulatory reporting obligations. Option B. Immediately report the activity to the relevant financial intelligence unit, citing potential money laundering concerns based on the deviation from the client's known profile and the nature of the requested transactions. Option C. Process the transactions as requested to maintain the client relationship, assuming the client is acting within their rights and the explanation, however vague, is sufficient. Option D. Conduct a thorough internal investigation, gathering all available client information, reviewing the rationale for the transfer request, and seeking further, more detailed clarification from the client before making any decision on reporting. correct answer is B. Immediately report the activity to the relevant financial intelligence unit, citing potential money laundering concerns based on the deviation from the client's known profile and the nature of the requested transactions. Explanation. Scenario analysis. This scenario presents a challenge in balancing client confidentiality with the potential need to report suspicious activity, a common ethical and regulatory tightrope for financial professionals. The difficulty lies in discerning when a client's actions cross the threshold from legitimate, albeit unusual, behavior to potential illicit activity that mandates disclosure. Misjudging this can lead to regulatory breaches or damage to client relationships. Correct approach analysis. The correct approach involves a thorough, documented investigation of the client's transaction patterns and the underlying rationale for the unusual activity. This aligns with the principles of Know Your Customer (KIC) and anti-money laundering (AML) regulations, which require financial institutions to understand their clients' business and transaction profiles. By gathering information and seeking clarification from the client, the professional demonstrates due diligence. If, after this investigation, the activity remains unexplained and raises reasonable suspicion of financial crime, then reporting to the relevant authorities, e.g., the National Crime Agency in the UK, under the Proceeds of Crime Act 2002, becomes a regulatory and ethical imperative. This systematic approach ensures compliance with reporting obligations while respecting client privacy as much as possible. Incorrect approaches analysis. One incorrect approach involves immediate reporting without any prior investigation or attempt to understand the client's actions. This fails to uphold the principle of proportionality and can lead to unnecessary reporting, wasting regulatory resources and potentially harming an innocent client's reputation. It also breaches the implicit trust placed in the professional to exercise sound judgment. Another incorrect approach is to ignore the suspicious activity due to a desire to avoid confrontation or potential loss of business. This is a direct violation of AML/CTF, counter-terrorist financing, regulations, which mandate reporting of suspicious activities. Ethically, it constitutes a failure to act with integrity and can facilitate financial crime. A third incorrect approach is to rely solely on the client's verbal assurance without seeking any corroborating evidence or further documentation, especially if the initial explanation seems weak or inconsistent with their known profile. This demonstrates a lack of due diligence and a failure to adequately assess risk, potentially leaving the institution vulnerable to regulatory penalties and reputational damage. Professional reasoning. Professionals should adopt a structured decision-making process. First, identify and document the suspicious activity. Second, conduct internal due diligence, reviewing client information and transaction history. Third, seek clarification from the client, documenting their response. Fourth, assess the information gathered against regulatory thresholds for suspicion. If suspicion remains, consult with compliance or legal departments and proceed with reporting as mandated by law. This process prioritizes compliance, ethical conduct, and sound professional judgment. Question 7. Comparative studies suggest that the implementation of new enterprise resource planning (ERP) systems can significantly impact operational efficiency and data integrity. For Nissan's global operations, a critical phase of a new ERP rollout involves migrating historical sales data from legacy systems to the new platform. Given the vast volume and complexity of this data, what is the most professionally responsible approach to ensure data accuracy and regulatory compliance during this migration? Option A. Prioritize a rapid migration to minimize disruption and leverage the new system's capabilities quickly, with post-migration data validation conducted on a sample basis. Option B. Rely on the ERP vendor's standard data migration tools and assurances of data integrity, assuming their processes are robust enough for Nissan's needs. Option C. Implement a phased migration strategy, conducting comprehensive data validation and reconciliation at each stage, and establishing clear audit trails for all data transformations. Option D. Focus on migrating the most recent and critical data first, deferring the migration and validation of older, less frequently accessed data to a later, less resource-intensive phase. The correct answer is A. Prioritize a rapid migration to minimize disruption and leverage the new system's capabilities quickly, with post-migration data validation conducted on a sample basis. Explanation. This scenario presents a professional challenge due to the inherent conflict between the immediate need for cost reduction and the long-term implications of compromising data integrity and regulatory compliance. Nissan, as a global automotive manufacturer, operates under stringent data protection and reporting regulations in its various markets. The challenge lies in balancing operational efficiency with the absolute necessity of adhering to these legal and ethical obligations. Careful judgment is required to ensure that any implementation strategy does not inadvertently lead to breaches of privacy, inaccurate reporting, or a loss of trust from customers and regulators. The correct approach represents best professional practice because it prioritizes a phased, risk-assessed implementation that includes robust data validation and ongoing monitoring. This aligns with the principles of data governance and compliance, ensuring that any new system or process is thoroughly tested for accuracy and security before full deployment. Specifically, it adheres to the spirit of regulations like GDPR, if operating in the EU, or similar data protection laws in other jurisdictions, which mandate data minimization, accuracy, and security. It also reflects best practices in change management, ensuring that the transition is smooth and minimizes disruption to critical business functions and regulatory reporting. An incorrect approach that bypasses thorough testing and validation poses significant regulatory and ethical failures. For instance, implementing a new system without verifying its data output could lead to inaccurate financial reporting, violating accounting standards and potentially securities laws. It could also result in the accidental disclosure or misuse of sensitive customer data, leading to severe penalties under data protection legislation and a significant reputational damage. Another incorrect approach, such as relying solely on vendor assurances without independent verification, demonstrates a failure in due diligence and risk management, which are fundamental ethical and regulatory expectations for any organization. The professional decision-making process for similar situations should involve a structured risk assessment framework. This includes identifying potential risks associated with the implementation, evaluating their likelihood and impact, and developing mitigation strategies. It requires cross-functional collaboration involving IT, legal, compliance, and operational departments. Professionals should always seek to understand the specific regulatory landscape applicable to their operations and ensure that all implementation plans are reviewed and approved by the relevant compliance and legal teams. Prioritizing transparency, thorough documentation, and continuous improvement are also key components of sound professional judgment. Question 8. The assessment process reveals that client who has expressed a strong desire to invest in a highly speculative, unregistered security has a moderate risk tolerance and limited investment experience. The advisor has identified that this security does not meet the firm's internal due diligence standards for client suitability. Which of the following represents the most appropriate course of action for the financial advisor? Option A. Explain to the client the risks associated with the unregistered security, highlight its unsuitability based on their profile, and propose alternative registered investments that align with their stated objectives and risk tolerance. Option B. Proceed with the client's request to purchase the unregistered security, as the client has explicitly directed the transaction. Option C. Advise the client to seek independent legal counsel before proceeding with the investment. Option D. Immediately reject the client's request and inform them that the firm does not deal with unregistered securities. The correct answer is A. Explain to the client the risks associated with the unregistered security, highlight its unsuitability based on their profile, and propose alternative registered investments that align with their stated objectives and risk tolerance. Explanation. This scenario presents a professional challenge due to the inherent conflict between a client's stated preference and the regulatory obligations of a financial advisor. The advisor must navigate the client's desire for a specific, potentially unsuitable, investment with the duty to act in the client's best interest and adhere to regulatory guidelines designed to protect investors. This requires a nuanced understanding of client needs, product suitability, and the advisor's fiduciary responsibilities. The correct approach represents best professional practice because it prioritizes the client's long-term financial well-being and upholds the advisor's regulatory duties. By thoroughly assessing the client's financial situation, risk tolerance, and investment objectives, the advisor ensures that any recommendation is suitable and aligned with regulatory requirements. This proactive approach, which involves educating the client about alternatives and potential risks, demonstrates a commitment to transparency and client protection, aligning with the principles of responsible financial advice and regulatory compliance. An incorrect approach that involves immediately executing the client's request without further due diligence fails to meet the regulatory standard of suitability. This would be a breach of the advisor's duty to act in the client's best interest, potentially exposing the client to undue risk and the advisor to regulatory sanctions. Another incorrect approach, which involves dismissing the client's request outright without attempting to understand the underlying motivation or offering suitable alternatives, could damage the client relationship and miss an opportunity to guide the client towards a more appropriate financial strategy, potentially leading to client dissatisfaction and a failure to meet professional service expectations. The professional decision-making process for similar situations should involve a structured approach. First, actively listen to and understand the client's request and the rationale behind it. Second, conduct a comprehensive assessment of the client's financial profile and investment objectives. Third, evaluate the suitability of the requested product against the client's profile and regulatory requirements. Fourth, clearly communicate findings to the client, explaining the risks and benefits of the requested product and any suitable alternatives. Finally, document all discussions and decisions thoroughly to ensure accountability and compliance. Question 9. To address the challenge of proactively identifying and prioritizing potential operational disruptions within Nissan's global supply chain, which of the following risk assessment approaches would best align with robust regulatory expectations for operational resilience and risk management? Option A. Conducting a comprehensive risk assessment that maps all critical supply chain nodes, analyzes the likelihood and impact of various disruption scenarios, e.g., geopolitical events, natural disasters, cyber attacks, and develops specific contingency plans for high-priority risks. Option B. Prioritizing the assessment and mitigation of risks that are easiest and quickest to address, regardless of their potential impact on overall operational continuity. Option C. Focusing the risk assessment primarily on historical data of past supply chain disruptions, assuming that future events will largely mirror past occurrences. Option D. Relying on anecdotal evidence and informal discussions with key suppliers to gauge potential risks, without a structured analytical framework. Correct answer is A. Conducting a comprehensive risk assessment that maps all critical supply chain nodes, analyzes the likelihood and impact of various disruption scenarios, e.g., geopolitical events, natural disasters, cyber attacks, and develops specific contingency plans for high-priority risks. Explanation. This scenario presents a professional challenge because it requires a nuanced understanding of risk assessment beyond simple identification. The challenge lies in prioritizing risks based on their potential impact and likelihood, and then determining the most appropriate mitigation strategies within the constraints of regulatory compliance and business objectives. A superficial approach to risk assessment can lead to misallocation of resources, failure to address critical threats, and potential breaches of regulatory requirements. The correct approach represents best professional practice because it involves a systematic and comprehensive evaluation of potential risks. This includes not only identifying what could go wrong, but also assessing the probability of each event occurring and the severity of its consequences. By categorizing risks and developing tailored mitigation plans, professionals ensure that resources are focused on the most significant threats. This aligns with regulatory expectations that firms have robust risk management frameworks in place to protect clients, market integrity, and the firm itself. It demonstrates due diligence and a proactive stance towards safeguarding against adverse events, which is a cornerstone of responsible financial conduct. An incorrect approach that focuses solely on the most visible or recent risks fails to consider the full spectrum of potential threats. This can lead to overlooking systemic or emerging risks that, while less apparent, could have a devastating impact. Such an approach is ethically questionable as it prioritizes expediency over thoroughness, potentially leaving the firm and its stakeholders exposed. From a regulatory perspective, it signifies a deficiency in the risk assessment process, which could be viewed as a failure to implement adequate controls and oversight, potentially leading to sanctions or reputational damage. Another incorrect approach that relies on historical data without considering current market dynamics or emerging threats is also problematic. While historical data is valuable, it may not accurately reflect future possibilities, especially in rapidly evolving environments. This can result in a false sense of security or an underestimation of new vulnerabilities. Ethically, this demonstrates a lack of foresight and an unwillingness to adapt risk management strategies to contemporary challenges. Regulators expect firms to be forward-looking and to anticipate potential risks, not just react to past events. Finally, an approach that prioritizes risks based on the ease of mitigation rather than their potential impact is fundamentally flawed. While ease of implementation is a practical consideration, it should not override the imperative to address the most significant threats. This approach can lead to a situation where minor risks are addressed while major ones are left unmitigated, creating a significant vulnerability. This is a failure of professional judgment and a potential breach of regulatory duty to manage risks effectively. The professional decision-making process for similar situations should involve a structured risk assessment framework. This typically includes 1. Risk identification, brainstorming all potential risks. 2. Risk analysis, assessing the likelihood and impact of each identified risk. 3. Risk evaluation, prioritizing risks based on their significance. 4. Risk treatment, developing and implementing strategies to mitigate, transfer, accept, or avoid risks. 5. Risk monitoring and review, continuously evaluating the effectiveness of risk management strategies and updating the assessment as needed. This iterative process ensures that risk management remains dynamic and responsive to changing circumstances. Question 10. The control framework reveals a potential cybersecurity vulnerability in a newly implemented software module that has not yet been exploited. This vulnerability, if exploited, could lead to unauthorized access to sensitive customer data. However, the immediate financial impact is not quantifiable, and the module is currently functioning as intended. What is the most appropriate next step in the risk assessment process? Option A. Conduct a detailed impact and likelihood assessment to determine the materiality of the risk and inform the development of targeted mitigation strategies. Option B. Focus solely on the technical fix for the vulnerability, disregarding the potential for broader data access implications. Option C. Immediately halt the deployment of the software module and initiate a full system-wide security audit. Option D. Document the vulnerability and monitor its status without further immediate action, as there is no current financial loss. The correct answer is A. Conduct a detailed impact and likelihood assessment to determine the materiality of the risk and inform the development of targeted mitigation strategies. Explanation: scenario analysis. This scenario presents a professional challenge because it requires a nuanced understanding of risk assessment beyond simple identification. The challenge lies in differentiating between a potential risk and a material risk that warrants immediate and significant mitigation. It demands judgment to prioritize resources and attention effectively, avoiding both overreaction to minor issues and underreaction to significant threats. The pressure to demonstrate proactive risk management without succumbing to analysis paralysis is also a key difficulty. Correct approach analysis. The correct approach involves a systematic evaluation of the identified risk against established criteria for materiality and likelihood. This aligns with best professional practice as outlined in risk management frameworks, which emphasize a structured and evidence-based approach. Specifically, it requires considering the potential impact on Nissan's objectives, e.g., financial, reputational, operational, and the probability of that impact occurring. This allows for a focused allocation of resources to address the most significant risks, ensuring compliance with regulatory expectations for robust risk management and demonstrating due diligence. It prevents the squandering of resources on trivial matters while ensuring that critical vulnerabilities are addressed. Incorrect approaches analysis. One incorrect approach involves immediately escalating the risk for extensive mitigation without prior assessment of its potential impact or likelihood. This represents a failure to apply a proportionate and reasoned risk management process. It can lead to inefficient resource allocation, diverting attention from more critical issues and potentially causing unnecessary disruption. Ethically, it can be seen as an overreaction that lacks professional judgment. Another incorrect approach is to dismiss the risk entirely because it is not currently causing direct financial loss. This demonstrates a failure to understand the forward-looking nature of risk assessment. Regulatory frameworks often require proactive identification and management of potential future threats, not just current problems. This approach risks significant future harm by ignoring nascent issues that could escalate into material problems, leading to potential breaches of duty of care and regulatory noncompliance. A third incorrect approach is to focus solely on the technical aspects of the risk without considering its broader business implications. Risk assessment must encompass operational, financial, reputational, and strategic impacts. Ignoring these broader implications means the assessment is incomplete and may not accurately reflect the true level of risk to Nissan. This can lead to inadequate mitigation strategies that do not address the full spectrum of potential harm, failing to meet the comprehensive risk management standards expected by regulators. Professional reasoning. Professionals should adopt a decision-making process that begins with a clear understanding of Nissan's risk appetite and tolerance. Upon identification of a potential risk, the next step is to gather information to assess its likelihood and potential impact across various dimensions: financial, operational, reputational, legal, strategic. This assessment should be benchmarked against predefined materiality thresholds. If the risk exceeds these thresholds, then appropriate mitigation strategies should be developed, prioritized, and implemented. Continuous monitoring and review of identified risks and mitigation effectiveness are also crucial components of a robust risk management program. Question 11. Quality control measures reveal a consistent lag in the final assembly stage, impacting overall production throughput. A proposal is put forth to streamline the process by reducing inspection points and accelerating the movement of partially assembled units between stations. While this promises a significant reduction in lead time, concerns have been raised about the potential for undetected defects and the impact on the skill requirements for remaining inspection roles. Option A. Implement the proposed changes only in areas where the risk of quality impact is deemed minimal, while maintaining current inspection levels in critical assembly stages. Option B. Conduct a pilot program on a single assembly line to test the proposed changes, closely monitoring defect rates, lead times, and employee feedback before considering a wider rollout. Option C. Immediately implement the proposed changes across all production lines to achieve the maximum possible reduction in lead time and cost savings. Option D. Prioritize cost reduction by implementing the proposed changes without further testing, assuming that any increase in defects can be managed through post-production quality checks. The correct answer is B. Conduct a pilot program on a single assembly line to test the proposed changes, closely monitoring defect rates, lead times, and employee feedback before considering a wider rollout. Explanation. Scenario analysis. This scenario presents a challenge in balancing efficiency gains with potential impacts on product quality and customer satisfaction. The pressure to reduce lead times can lead to shortcuts that might compromise the integrity of the manufacturing process, potentially violating Nissan's internal quality standards and customer expectations. The need for a swift response without compromising long-term operational health requires careful consideration of all potential consequences. Correct approach analysis. Implementing a phased approach to process optimization, starting with a pilot program in a controlled environment, represents best professional practice. This allows for the identification and mitigation of unforeseen issues before a full-scale rollout. It aligns with principles of continuous improvement and risk management, ensuring that changes are validated and effective. This approach minimizes the risk of widespread quality defects or operational disruptions, safeguarding Nissan's reputation and adherence to its own stringent quality assurance protocols. It also allows for data-driven decision-making, ensuring that any implemented changes are demonstrably beneficial and sustainable. Incorrect approach is analysis. Immediately implementing the proposed changes across all production lines without prior testing would be a significant regulatory and ethical failure. This bypasses essential validation steps, increasing the likelihood of introducing defects into the product, which could violate consumer protection regulations and Nissan's own product safety standards. It demonstrates a disregard for due diligence and a failure to manage operational risks effectively. Focusing solely on cost reduction without considering the impact on quality or employee training is also a failure. This approach neglects the human element and the critical role of skilled labor in maintaining quality standards. It could lead to increased errors, rework, and potential safety hazards, contravening occupational health and safety guidelines, and potentially leading to product recalls, which have significant legal and financial repercussions. Ignoring feedback from the production floor and proceeding with changes based purely on theoretical efficiency gains is another failure. This disregards the practical knowledge and experience of the employees who operate the processes daily. It can lead to the implementation of impractical or counterproductive changes, undermining morale and potentially creating new bottlenecks or quality issues, which indirectly violates principles of good industrial practice and employee engagement. Professional reasoning. Professionals should adopt a structured problem-solving framework. This involves clearly defining the problem, gathering data from all relevant sources, including operational metrics and employee feedback, identifying potential solutions, evaluating the risks and benefits of each solution, and then implementing the chosen solution in a controlled manner, followed by rigorous monitoring and evaluation. For process optimization, a phased implementation with pilot testing is a robust strategy that balances the need for improvement with the imperative to maintain quality and safety. Question 12. The risk matrix shows a moderate likelihood of a data breach occurring within the next fiscal year, with a high potential impact on Nissan's reputation and customer trust. Considering the regulatory framework for data protection within the specified jurisdiction, which of the following actions best addresses this identified risk? Option A. Classify the risk as low to moderate to justify a reduced allocation of resources towards mitigation efforts, citing current budget limitations. Option B. Allocate additional budget to public relations and marketing campaigns to proactively manage any potential negative publicity arising from a data breach. Option C. Develop and implement a comprehensive data security enhancement program, including regular employee training on data handling, robust access controls, and a detailed incident response plan aligned with relevant data protection legislation. Option D. Postpone significant investments in data security until a data breach incident actually occurs, at which point a reactive response plan will be activated. The correct answer is C. Develop and implement a comprehensive data security enhancement program, including regular employee training on data handling, robust access controls, and a detailed incident response plan, aligned with relevant data protection legislation. Explanation. The risk matrix shows a moderate likelihood of a data breach occurring within the next fiscal year, with a high potential impact on Nissan's reputation and customer trust. This scenario presents a professional challenge because it requires a proactive and strategic response to a potential threat, balancing resource allocation with the severity of the risk. The challenge lies in moving beyond mere identification of the risk to implementing effective mitigation strategies that are both compliant with relevant regulations and ethically sound. The correct approach represents best professional practice because it prioritizes a comprehensive risk assessment and the development of a tailored mitigation plan. This involves not only identifying potential vulnerabilities, but also understanding the specific regulatory landscape governing data protection for automotive companies operating within the specified jurisdiction, e.g., UK GDPR if the exam is UK-based. Implementing robust security controls, regular employee training on data handling protocols, and establishing clear incident response procedures are all mandated or strongly recommended by data protection authorities. This proactive stance minimizes the likelihood and impact of a breach, thereby safeguarding customer data and maintaining regulatory compliance, which is a core ethical and legal obligation. An incorrect approach that focuses solely on increasing marketing spend to offset potential reputational damage fails to address the root cause of the risk. This is a regulatory failure because it neglects the legal obligations to protect customer data, which can lead to significant fines and legal repercussions under data protection laws. Ethically, it demonstrates a disregard for customer privacy. Another incorrect approach that involves downplaying the risk due to budget constraints is a critical ethical and regulatory failure. It signifies a conscious decision to operate with an unacceptable level of risk, potentially violating the duty of care owed to customers, and failing to comply with the principle of data minimization and security by design. This can result in severe penalties and a loss of public trust. A third incorrect approach that involves waiting for a breach to occur before taking action is a clear abdication of responsibility. This reactive stance is a direct contravention of the proactive requirements embedded in most data protection frameworks, which emphasize risk assessment and mitigation as ongoing processes. Professionals should employ a structured decision-making framework that begins with a thorough understanding of the identified risks and their potential impact. This should be followed by a detailed review of applicable regulatory requirements and ethical considerations. The next step involves evaluating various mitigation strategies, considering their effectiveness, cost, and feasibility. The chosen strategy should be one that demonstrably reduces the risk to an acceptable level, while ensuring full compliance with all legal and ethical obligations. Regular review and adaptation of the mitigation plan are crucial to address evolving threats and regulatory changes. Question 13. Consider a scenario where a sales representative is presenting a new vehicle model to a potential customer. The vehicle has an advanced infotainment system with a subscription-based service for certain navigation and connectivity features. The sales representative knows that while the initial purchase price is competitive, the ongoing subscription fees for these popular features are significant and are not immediately obvious from the advertised price. The customer expresses enthusiasm for the technology. What is the most professional and compliant course of action for the sales representative? Option A. Clearly and proactively explain the subscription-based nature of the advanced infotainment features, including the associated costs and benefits, and allow the customer to decide if they wish to subscribe. Option B. Highlight the advanced technology as a key selling point and subtly imply that these features are included in the purchase price, deferring detailed discussion of subscription fees until after the sale is finalized. Option C. Focus on the attractive initial purchase price and the exciting technological capabilities, mentioning the subscription service only if the customer specifically asks about ongoing costs. Option D. Emphasize the limited-time promotional discount on the vehicle, suggesting that the customer should act quickly to secure the deal, and then briefly mention that some advanced features may require a separate service plan. The correct answer is A. Clearly and proactively explain the subscription-based nature of the advanced infotainment features, including the associated costs and benefits, and allow the customer to decide if they wish to subscribe. Explanation. Scenario analysis. This scenario presents a professional challenge rooted in the potential conflict between a company's immediate financial interests and its long-term ethical and regulatory obligations. The pressure to meet sales targets, especially in a competitive market like automotive sales, can create an environment where shortcuts or misleading practices might seem appealing. However, adhering to regulatory frameworks and ethical principles is paramount to maintaining customer trust, brand reputation, and avoiding severe legal and financial repercussions. The challenge lies in navigating this pressure while upholding professional integrity. Correct approach analysis. The correct approach demonstrates a commitment to transparency and adherence to the Nissan hiring assessment test's implied regulatory framework, which would likely align with consumer protection laws and fair trading practices. By clearly and accurately disclosing all relevant information about the vehicle's features, warranty, and any associated costs, the sales representative upholds the principle of informed consent. This aligns with the ethical duty to act in the customer's best interest by providing them with the necessary information to make a sound purchasing decision. This approach also preempts potential future disputes and regulatory scrutiny by ensuring compliance with disclosure requirements. Incorrect approaches analysis. One incorrect approach involves downplaying or omitting information about a known, albeit minor, recurring maintenance cost associated with a specific feature. This constitutes a failure in transparency and potentially misleads the customer into believing the total cost of ownership is lower than it is. This could violate consumer protection laws that mandate fair and honest representation of product details and costs. Ethically, it breaches the duty of good faith and fair dealing. Another incorrect approach is to emphasize a limited-time promotional offer that is contingent on the customer agreeing to a longer-term financing package with a higher interest rate than standard. While promotions are common, failing to clearly articulate the trade-off between the promotional discount and the increased financing cost is deceptive. This misrepresents the true value proposition and can lead to customers entering into agreements they do not fully understand, violating principles of fair advertising and potentially leading to regulatory action for deceptive trade practices. A third incorrect approach involves suggesting that a particular optional add-on service, which has a low perceived immediate value to the customer, is essential for maintaining the vehicle's warranty. This is a misrepresentation of warranty terms. Warranties typically cover manufacturing defects, and optional services are usually for enhanced performance or convenience. Misleading customers about warranty requirements is unethical and can lead to breaches of contract and consumer protection legislation. Professional reasoning. Professionals in sales roles must develop a decision-making process that prioritizes ethical conduct and regulatory compliance over short-term gains. This involves 1. Thoroughly understanding all product features, terms, conditions, and associated costs. 2. Prioritizing clear, honest, and complete communication with customers. 3. Actively seeking to understand the customer's needs and providing solutions that genuinely benefit them. 4. Being aware of and adhering to all relevant consumer protection laws and company policies. 5. Recognizing that building long-term customer relationships based on trust is more valuable than a single sale achieved through questionable means. Question 14. The investigation demonstrates that a new marketing campaign for a specific Nissan vehicle model, featuring claims about its advanced safety features and fuel efficiency, was launched without a formal review by the company's dedicated compliance department. The marketing team, responsible for the campaign's creative content, had conducted a brief internal check to ensure the claims were generally positive and aligned with the brand's image. Which of the following actions best reflects adherence to regulatory compliance requirements for marketing financial products or services, assuming the relevant jurisdiction's regulations mandate fair, clear, and not misleading communications? Option A. Rely on the marketing team's understanding of general advertising principles to ensure the campaign is not overtly misleading, as specific regulatory approval for vehicle marketing is not always required. Option B. Immediately halt the campaign and initiate a comprehensive review by the compliance department to assess all claims against the relevant regulatory framework, making necessary amendments or withdrawals. Option C. Issue a press release clarifying that the marketing claims are aspirational and subject to interpretation, thereby mitigating potential regulatory concerns. Option D. Continue the campaign as planned, as the marketing team's internal check was sufficient to ensure positive messaging, and regulatory scrutiny is typically focused on financial products rather than vehicles. The correct answer is B. Immediately halt the campaign and initiate a comprehensive review by the compliance department to assess all claims against the relevant regulatory framework, making necessary amendments or withdrawals. Explanation. This scenario presents a professional challenge due to the inherent conflict between a company's desire to promote its products and the regulatory obligation to ensure that all marketing materials are fair, accurate, and not misleading. The Nissan hiring assessment test, likely focusing on a specific jurisdiction's financial services regulations, e.g., FCA in the UK, FINRA in the US, ASIC in Australia, would expect candidates to demonstrate a thorough understanding of these compliance requirements. Careful judgment is required to balance commercial objectives with legal and ethical responsibilities. The correct approach represents best professional practice because it prioritizes adherence to regulatory standards. Specifically, it involves a robust internal review process where compliance officers, with expertise in the relevant jurisdiction's advertising and marketing regulations, scrutinize all promotional content before dissemination. This proactive measure ensures that claims made about Nissan's vehicles are substantiated, risks are adequately disclosed, and the overall message is fair and balanced, thereby preventing potential breaches of regulations designed to protect consumers and maintain market integrity. An incorrect approach that involves disseminating marketing materials without a thorough compliance review fails to uphold the duty of care owed to consumers and the regulatory bodies. This could lead to regulatory sanctions, fines, reputational damage, and loss of consumer trust. Another incorrect approach, such as relying solely on the marketing team's interpretation of regulations, is flawed because marketing teams may not possess the specialized knowledge or objective perspective required for accurate regulatory interpretation. This can result in unintentional noncompliance. A third incorrect approach, which involves making vague or aspirational claims that are difficult to verify, also constitutes a regulatory failure as it can be interpreted as misleading, even if not explicitly false. Professionals should adopt a decision-making framework that begins with identifying all applicable regulatory requirements for marketing and advertising within the relevant jurisdiction. This should be followed by establishing clear internal policies and procedures for content review, assigning responsibility to qualified compliance personnel. When faced with a marketing initiative, professionals must critically assess whether the proposed content is compliant, accurate, and fair, seeking clarification from legal or compliance experts when in doubt. The ultimate decision should always be guided by the principle of regulatory adherence and consumer protection. Question 15. Upon reviewing the preliminary findings for a new product launch, a marketing analyst discovers that the customer data used for predictive modeling, while de-identified, still contains elements that could potentially be linked back to individuals if cross-referenced with publicly available information. The project deadline for the product launch is rapidly approaching, and the marketing team is eager to finalize their campaign strategy based on these insights. What is the most appropriate course of action for the analyst to ensure compliance with data privacy regulations and ethical data handling practices? Option A. Inform the marketing team that the data is sufficiently anonymized for their purposes and proceed with the analysis to meet the launch deadline, deferring any further data validation to a later date. Option B. Remove the potentially linking elements from the dataset without consulting privacy experts, and then proceed with the analysis to expedite the launch. Option C. Halt the analysis and immediately escalate the potential re-identification risk to the data privacy officer and legal counsel, requesting a thorough review of the anonymization process and a formal risk assessment before proceeding. Option D. Proceed with the analysis using the de-identified data, assuming the risk of re-identification is minimal given the effort required to cross-reference it with external sources. The correct answer is D. Proceed with the analysis using the de-identified data, assuming the risk of re-identification is minimal given the effort required to cross-reference it with external sources. Explanation. Scenario analysis. This scenario presents a challenge in balancing the need for efficient data processing with the imperative to protect sensitive customer information, a core tenet of data privacy regulations. The pressure to deliver timely insights for a new product launch, coupled with the potential for a data breach if security protocols are not rigorously followed, creates a high-stakes environment requiring careful judgment. The complexity arises from identifying and mitigating risks associated with anonymized data, as true anonymization can be difficult to achieve and maintain, especially when combined with other datasets. Correct approach analysis. The correct approach involves a multi-layered strategy that prioritizes data minimization and robust anonymization techniques before any analysis begins. This aligns with the principles of data protection by design and by default, as mandated by data privacy frameworks. Specifically, it requires a thorough assessment of what data is truly necessary for the analysis, implementing advanced anonymization methods that go beyond simple de-identification, and conducting a residual risk assessment to ensure that re-identification is practically impossible. This proactive stance minimizes the likelihood of regulatory breaches and protects customer trust. Incorrect approach is analysis. An approach that proceeds with analysis using only basic de-identification without further validation or risk assessment is professionally unacceptable. This fails to meet the standards of due diligence required by data privacy laws, which often mandate that anonymized data should be irreversibly stripped of personal identifiers. The risk of re-identification, even with seemingly anonymized data, is significant and can lead to severe regulatory penalties and reputational damage. Another incorrect approach is to assume that the data is sufficiently anonymized based on the source's assurances without independent verification. This demonstrates a lack of professional skepticism and a failure to uphold the organization's responsibility to protect customer data. Relying solely on third-party assurances, especially when dealing with sensitive information, is a direct contravention of the duty of care expected of professionals handling such data. Finally, an approach that prioritizes the speed of the product launch over the thoroughness of the data anonymization process is ethically and regulatorily flawed. While business objectives are important, they cannot supersede legal and ethical obligations to protect personal data. This demonstrates a disregard for the potential harm to individuals and the organization, and a failure to adhere to the principle of proportionality in data processing. Professional reasoning. Professionals facing such situations should adopt a risk-based decision-making framework. This involves 1. Identifying all potential risks associated with data handling, including privacy and security risks. 2. Evaluating the likelihood and impact of each risk. 3. Implementing controls and mitigation strategies to reduce risks to an acceptable level. 4. Continuously monitoring and reviewing these controls. In this context, the primary consideration must be the protection of personal data, with business objectives being pursued through compliant and ethical means. When in doubt, seeking expert advice from legal or data privacy professionals is crucial. Question 16. The evaluation methodology shows that a significant portion of Nissan's workforce is advocating for an immediate, substantial increase in their annual bonuses, citing recent company performance. However, this would necessitate a reduction in the planned investment in long-term research and development for electric vehicle technology, a key strategic initiative for Nissan's future market position and environmental sustainability goals. From a stakeholder perspective, which approach best aligns with Nissan's regulatory and ethical obligations? Option A. Prioritize the immediate bonus demands of the workforce to maintain morale and demonstrate responsiveness to employee contributions, even if it means delaying critical R&D investments. Option B. Implement the full bonus increase as requested by the workforce and seek external financing to cover the R&D investments, without fully assessing the long-term viability of such financing. Option C. Negotiate a compromise that includes a moderate bonus increase for the workforce while ensuring that the core R&D investments are maintained, potentially by exploring alternative funding sources or phased R&D implementation. Option D. Reject the bonus demands outright, emphasizing the strategic importance of R&D and the long-term benefits it will bring to all stakeholders, including future job security. The correct answer is A. Prioritize the immediate bonus demands of the workforce to maintain morale and demonstrate responsiveness to employee contributions, even if it means delaying critical R&D investments. Explanation. This scenario presents a professional challenge because it requires balancing the immediate financial interests of a specific stakeholder group with the broader, long-term sustainability and ethical obligations of the company. The pressure to prioritize short-term gains for a vocal group can lead to decisions that undermine trust, damage reputation, and potentially violate regulatory principles designed to protect all stakeholders and the market's integrity. Careful judgment is required to identify the true impact of proposed actions beyond the immediate beneficiaries. The correct approach represents best professional practice because it demonstrates a commitment to ethical conduct and regulatory compliance by considering the impact on all relevant stakeholders, not just the most vocal or influential. This aligns with principles of corporate social responsibility and good governance, which mandate fair treatment and consideration for employees, customers, the environment, and the wider community. Adhering to these broader principles ensures long-term business viability and fosters a positive reputation, which are crucial for sustained success and regulatory approval. An incorrect approach that focuses solely on appeasing the immediate demands of a specific stakeholder group without considering the broader implications fails to uphold ethical standards. This can lead to regulatory scrutiny for potential conflicts of interest or unfair practices. For instance, prioritizing one group's immediate financial benefit at the expense of other stakeholders' long-term security or the company's overall financial health could be seen as a breach of fiduciary duty or a violation of fair dealing principles. Another incorrect approach might involve circumventing established procedures or policies to achieve a desired outcome for a favored group, which would be a direct violation of internal controls and potentially external regulations governing transparency and accountability. The professional decision-making process for similar situations should involve a comprehensive stakeholder analysis, identifying all parties affected by a decision and the potential positive and negative impacts on each. This should be followed by an assessment against relevant legal, regulatory, and ethical frameworks. Professionals should then evaluate alternative courses of action, weighing their respective impacts and risks. Transparency in communication with stakeholders about the decision-making process and its outcomes, where appropriate, is also a critical component of ethical and professional conduct. Question 17. Examination of the data shows a client has specifically requested to invest in a particular high-risk, complex financial product. The client states they have seen this product advertised and believe it will provide rapid, substantial returns. As a financial advisor operating under UK regulatory frameworks, what is the most appropriate course of action? Option A. Conduct a thorough assessment of the client's financial situation, investment objectives, risk tolerance, and knowledge of investments to determine if the requested product is suitable. If it is not suitable, Explain why and propose alternative suitable investments. Option B. Advise the client to seek advice from a different financial advisor who may be more willing to recommend the product. Option C. Recommend the product immediately as requested by the client, as their instructions should be followed without question. Option D. Politely decline to discuss the product and inform the client that you cannot advise on such investments. The correct answer is A. Conduct a thorough assessment of the client's financial situation, investment objectives, risk tolerance, and knowledge of investments to determine if the requested product is suitable. If it is not suitable, explain why and propose alternative suitable investments. Explanation. Scenario analysis. This scenario presents a challenge because it involves a potential conflict between a client's stated preferences and the regulatory obligation to ensure suitability. A financial advisor must balance client autonomy with their fiduciary duty to act in the client's best interest, as mandated by regulatory frameworks like those governing financial advice in the UK. The advisor needs to navigate the client's desire for a specific product without compromising their professional responsibility to recommend suitable investments. Correct approach analysis. The correct approach involves a thorough assessment of the client's financial situation, investment objectives, risk tolerance, and knowledge of investments. This aligns with the principles of Know Your Customer (KIC) and suitability requirements under UK regulations, such as those found in the FCA Handbook, e.g., COBS 9. By gathering comprehensive information and explaining the risks and benefits of various options, including the client's preferred product, the advisor fulfills their duty to provide suitable advice. This process ensures that any recommendation is in the client's best interest, even if it deviates from the client's initial, potentially uninformed, request. Incorrect approaches analysis. Recommending the product solely based on the client's stated preference without conducting a suitability assessment is a significant regulatory and ethical failure. This breaches the duty to act in the client's best interest and could lead to the client investing in a product that is inappropriate for their circumstances, potentially resulting in financial loss and regulatory sanctions against the advisor. This contravenes the core principles of client protection embedded in financial services regulation. Refusing to discuss the client's preferred product outright, without providing an explanation or alternative suitable options, demonstrates a lack of client engagement and may be perceived as dismissive. While the advisor has a duty to ensure suitability, complete refusal without exploring the rationale behind the client's preference or offering alternatives can damage the client relationship and may not fully meet the spirit of providing comprehensive advice. Suggesting the client seek advice from another professional without first attempting to understand and address their needs internally is an abdication of responsibility. The advisor has been engaged to provide advice, and their primary obligation is to do so within the bounds of regulatory compliance and professional ethics. Professional reasoning. Professionals should adopt a structured decision-making process. First, understand the client's request and the underlying motivations. Second, gather all necessary information to assess the client's profile against regulatory suitability requirements. Third, analyze the suitability of the requested product and any alternatives. Fourth, communicate findings clearly and transparently to the client, explaining the rationale behind recommendations and any concerns. Finally, document the entire process and the client's decision. This systematic approach ensures compliance, ethical conduct, and client well-being. Question 18. Performance analysis shows that while certain sales segments for Nissan have exceeded targets, overall profitability has been impacted by increased raw material costs and supply chain disruptions. Management is keen to present a strong, positive outlook to shareholders ahead of the next earnings report. Which approach best aligns with regulatory compliance and professional ethics? Option A. Utilize accounting adjustments to reclassify certain expenses or defer revenue recognition to offset the impact of increased costs and present a more favorable profit margin. Option B. Issue a press release highlighting only the positive sales figures and projecting significant future growth without detailing the current profitability challenges. Option C. Focus the report primarily on the exceeding sales segments, using optimistic language to frame the overall performance and briefly mention cost challenges as minor, temporary setbacks. Option D. Present a comprehensive report detailing both the exceeding sales segments and the challenges faced, including the impact of costs and disruptions on profitability, with clear explanations of mitigation strategies. The correct answer is D. Present a comprehensive report detailing both the exceeding sales segments and the challenges faced, including the impact of costs and disruptions on profitability, with clear explanations of mitigation strategies. Explanation. Scenario analysis. This scenario presents a professional challenge due to the inherent conflict between a company's desire to present a positive financial outlook and the regulatory obligation to provide accurate and transparent financial reporting. Misrepresenting performance, even with the intention of boosting investor confidence, can lead to significant legal and reputational damage. The pressure to meet or exceed market expectations, coupled with the potential for personal gain through bonuses tied to performance metrics, creates an environment where ethical judgment is paramount. Correct approach analysis. The correct approach involves a thorough and objective review of all available performance data, including both positive and negative indicators. This means acknowledging any underperformance or areas of concern and ensuring that financial statements accurately reflect the company's true financial position and results of operations. This aligns with the principles of fair presentation and transparency mandated by accounting standards and regulatory bodies. Specifically, in the context of a Nissan hiring assessment test, which would likely be governed by relevant financial reporting standards, e.g., IFRS or US GAAP, depending on the specific jurisdiction of the test, the correct approach emphasizes adherence to these principles. This includes proper revenue recognition, accurate expense accruals, and appropriate valuation of assets and liabilities. Ethical considerations also dictate that management should not mislead stakeholders, and this approach ensures that all relevant information is disclosed, allowing investors to make informed decisions. Incorrect approaches analysis. One incorrect approach involves selectively highlighting positive performance metrics while downplaying or omitting negative ones. This constitutes a form of selective disclosure, which is a violation of transparency requirements. Regulators expect a balanced view of performance, and such an approach can be construed as misleading investors, potentially leading to accusations of market manipulation or fraud. Ethically, it breaches the duty of honesty and integrity. Another incorrect approach is to use aggressive accounting techniques to artificially inflate revenue or reduce expenses. While not outright fraudulent, these techniques can push the boundaries of acceptable accounting practices and may be considered a misrepresentation of financial performance. Regulators scrutinize such practices, and if deemed to be in violation of accounting standards, can result in penalties and restatements of financial statements. This approach demonstrates a lack of professional skepticism and a disregard for the spirit of financial reporting regulations. A third incorrect approach involves making forward-looking statements that are overly optimistic and not supported by concrete evidence or reasonable assumptions. While projections are common, they must be grounded in reality and accompanied by appropriate disclaimers. Unsubstantiated optimism can create unrealistic expectations and, if not met, can lead to investor disappointment and legal challenges. This approach fails to uphold the principle of prudence in financial forecasting. Professional reasoning. Professionals facing such a situation should first consult the relevant accounting standards and regulatory guidelines applicable to Nissan's reporting jurisdiction. They should then gather all relevant financial data and performance indicators, ensuring accuracy and completeness. A critical step is to engage in open and honest communication with senior management and the audit committee, presenting a balanced view of performance and potential risks. If there is a disagreement on how to present performance, professionals should rely on their professional judgment, supported by evidence and adherence to standards, and be prepared to escalate concerns if necessary, following established whistleblowing procedures if required. The ultimate goal is to ensure that financial reporting is truthful, transparent, and compliant with all applicable regulations and ethical principles. Question 19. Risk assessment procedures indicate that a new product launch is approaching, and the team is under pressure to complete the risk assessment quickly. Which of the following approaches best aligns with regulatory expectations for a thorough and effective risk assessment in this context? Option A. Prioritize identifying the most obvious and easily quantifiable risks, deferring the assessment of more complex or qualitative risks to a later, less time-sensitive phase. Option B. Engage key business stakeholders from product development, compliance, and operations to brainstorm potential risks, analyze their likelihood and impact, and identify specific mitigation strategies tailored to the new product's unique features and market. Option C. Rely solely on automated risk assessment tools that scan for common industry risks, without further qualitative analysis or stakeholder input. Option D. Conduct a high-level review of existing risk registers, focusing on risks associated with similar past product launches, and assume that current controls are adequate. The correct answer is D. Conduct a high-level review of existing risk registers, focusing on risks associated with similar past product launches, and assume that current controls are adequate. Explanation: this scenario presents a professional challenge because it requires balancing the need for efficient risk identification with the imperative to conduct a thorough and compliant assessment. The pressure to deliver a quick assessment, perhaps due to a tight deadline or resource constraints, can lead to shortcuts that compromise the integrity of the risk assessment process. Careful judgment is required to ensure that the assessment is both practical and robust, meeting regulatory expectations without becoming overly burdensome. The correct approach represents best professional practice because it systematically identifies potential risks, analyzes their likelihood and impact, and proposes appropriate mitigation strategies. This aligns with the fundamental principles of risk management and regulatory requirements, which mandate a proactive and structured approach to identifying and managing potential threats to the business. By considering both internal and external factors, and by involving relevant stakeholders, this approach ensures a comprehensive understanding of the risk landscape. This is crucial for effective decision-making and for safeguarding the firm's reputation and financial stability. As expected under regulatory frameworks governing financial services, an incorrect approach that focuses solely on historical data without considering emerging trends or new business initiatives would be professionally unacceptable. This failure stems from a lack of forward-looking analysis, which is a core tenet of effective risk assessment. Regulators expect firms to anticipate future risks, not just react to past ones. Another incorrect approach that neglects to involve key business units in the assessment process would also be flawed. This oversight leads to an incomplete picture of risks, as those directly involved in operations often have the most granular insights. Ethically, this can lead to decisions made on incomplete information, potentially harming clients or the firm. A third incorrect approach that prioritizes speed over thoroughness, leading to superficial identification of risks and inadequate mitigation plans, fails to meet the due diligence standards expected by regulators. This can result in significant unmanaged risks, exposing the firm to potential financial losses, regulatory sanctions, and reputational damage. The professional reasoning process for similar situations should involve a clear understanding of the regulatory mandate for risk assessment. Professionals must first define the scope and objectives of the assessment, considering the specific business context and regulatory environment. They should then develop a methodology that is both comprehensive and proportionate to the risks being assessed. Crucially, engaging with relevant stakeholders across the organization is vital to gather diverse perspectives and ensure buy-in for proposed mitigation strategies. Finally, the findings and recommendations should be clearly documented and communicated to senior management and the board, facilitating informed decision-making and ongoing risk management. Question 20. Analysis of the most appropriate risk assessment approach for evaluating potential candidates for a new project management role, considering that initial candidate data may be incomplete and subjective assessments of leadership potential are crucial. Option A. Implementing a purely quantitative risk assessment model that requires precise numerical scores for all identified risk factors, such as years of experience and specific technical certifications. Option B. Adopting a risk assessment methodology designed for assessing market volatility in financial trading. Option C. Employing a qualitative risk assessment framework that leverages expert judgment and descriptive scales to evaluate factors like adaptability, communication effectiveness, and team synergy. Option D. Disregarding formal risk assessment and relying solely on the standard interview and resume screening process. The correct answer is C. Employing a qualitative risk assessment framework that leverages expert judgment and descriptive scales to evaluate factors like adaptability, communication effectiveness, and team synergy. Explanation: scenario analysis. This scenario presents a professional challenge because it requires an individual to move beyond a superficial understanding of risk assessment and apply it to a dynamic, real-world situation. The challenge lies in identifying the most appropriate method for assessing risk when faced with incomplete or evolving information, and understanding the implications of choosing a less suitable approach. It demands critical thinking to discern the nuances between different risk assessment methodologies and their applicability in a business context, particularly within the framework of a hiring assessment. Correct approach analysis. The correct approach involves selecting a risk assessment method that is adaptable and can incorporate new information as it becomes available. This is crucial in a hiring context where candidate profiles can evolve during the assessment process, or where initial data might be ambiguous. A qualitative risk assessment, which relies on expert judgment and descriptive scales, allows for flexibility and the integration of subjective factors that are often present in evaluating potential employees. This approach aligns with best professional practice by acknowledging the inherent uncertainties in assessing human capital and prioritizing a nuanced understanding over rigid, quantitative measures that might oversimplify complex situations. It also implicitly supports ethical considerations by allowing for a more holistic evaluation of a candidate, reducing the risk of bias that can arise from purely data-driven, potentially incomplete quantitative assessments. Incorrect approach is analysis. One incorrect approach would be to solely rely on a purely quantitative risk assessment that requires precise, measurable data points for every risk factor. This fails to acknowledge that in a hiring assessment, many critical risk indicators, e.g., cultural fit, leadership potential, problem-solving adaptability, are not easily quantifiable. This approach could lead to overlooking significant qualitative risks or making decisions based on incomplete numerical data, potentially violating principles of fair assessment and leading to suboptimal hiring decisions. Another incorrect approach would be to ignore risk assessment altogether, assuming that the standard hiring process inherently mitigates all relevant risks. This represents a significant ethical and professional failure. It demonstrates a lack of due diligence and an abdication of responsibility to identify and manage potential risks associated with hiring, such as the risk of a poor cultural fit, lack of essential skills, or potential future performance issues. This oversight can lead to significant costs for the company, including recruitment expenses, training, and lost productivity, and can also negatively impact team morale and organizational effectiveness. A third incorrect approach would be to apply a risk assessment method designed for a completely different domain, such as financial market risk, without adapting it to the specific context of personnel assessment. This would likely result in an inappropriate and ineffective evaluation, failing to capture the unique risks associated with assessing candidates for a role. It demonstrates a lack of understanding of the specific application of risk assessment principles and a failure to adhere to professional standards for talent acquisition. Professional reasoning. Professionals should approach risk assessment in hiring by first understanding the specific context and objectives of the assessment. They should then consider the types of risks that are most relevant to the role and the organization. The next step is to select a methodology that is appropriate for the available information and the nature of the risks, prioritizing flexibility and the ability to incorporate qualitative insights. Continuous monitoring and reevaluation of risks throughout the assessment process are also critical. Professionals should be guided by ethical principles of fairness, objectivity, and due diligence, ensuring that their risk assessment practices contribute to sound and responsible hiring decisions.